Good morning and welcome to the Australian Stock Reports online morning update for the 18th of November 2011. International markets suffered heavy losses overnight amid fears France and Spain will be the next dominoes to fall in Europe's debt crisis. A spike in French and Spanish bond yields ignited the latest wave of selling, with investors fretting Europe's bailout fund will be hopelessly inadequate to deal with the growing debt contagion. The equity rout was compounded by a Reuters report suggesting that there were no plans to help Italy from the EFSF. The problems in Europe added to concerns US lawmakers will be unable to reach an agreement on trimming the country's debt before next week's deadline. A failure to reach such an agreement will trigger across-the-board budget cuts that are likely to hamper the US economic recovery. As the table shows, it was a bloodbath everywhere with no market spared from the sell-off. Commodities experienced some of the night's heaviest falls, with gold slumping more than 3% as investors redirected safe haven flows into the US dollar. Fears Europe's debt crisis will infect the global economy weighed heavily on oil, which retreated sharply following yesterday's move past $100 a barrel. Among the major currencies, the US dollar clawed back earlier losses against the euro, whilst the Aussie fell below parity for the first time in over a month. The SPI was swept up in the overnight rout, eventually collapsing below the 42.20 support region. The index moved into a low of 41.84 before recovering some of its losses towards the end of the US session. The punishing sell-off on Wall Street is set to have a disastrous impact on the Aussie market this morning, which is currently set to open around 70 points weaker.
Get free access to our daily reports and recommendations now. Visit australianstockreport.com.au/try.